STOR Capital, a 5% dividend yield REIT that is growing fast in revenue every year. In this video I will show you everything you need to know about STOR Capital. I will check the investor presentation, 10K file, fact sheet information, dividends, and in the last part I will tell you if I will buy STOR Capital or not. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stock at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the companies. STOR Capital is engaged in the acquisition, investment and management of single-tenant operational real estate properties. STOR Capital invests in chain restaurants, supermarkets, health clubs, education, retail, service and distribution facilities. STOR Capital is active in 49 states and has more than 2,700 properties right now. STOR Capital has a strong portfolio which we will discuss in a moment. In this fact sheet we see that 50% of the customers has revenue over 200 million, 1 billion weighted average customer revenue, a 5% customer revenue growth in 2020, 41,000 locations operated by customers and 1/3 of the new business comes from existing customers. STOR Capital has a strong pipeline of $30 billion. They split it into 3 segments: service, manufacturing and retail. Service is their biggest segment and retail the smallest. I think this is well diversified. In this sheet we see the amount of customer and investment property locations are very diversified and growing every year. We also see that the occupancy is also very high, which comforts me a lot. No problems here. In this sheet we see the top customers. The top 10 customers are representing 18.4% in total with 368 locations, which is fine by me. You don't want your top 10 representing too much of your total portfolio. The top industries are restaurant full service, which also have the highest base rent and interest of 7%, and a total of 349 properties. In this sheet we see that service is representing 65%. Manufacturing 20% and service retail is representing 15%. So the main focus is service. In this sheet we see the geo-diversification. They are most active on the right part of the US, so this means a lot of potential is on the left part. Also overseas there are maybe some opportunities for this company in the future. So now that we know everything about what STOR Capital does, it's time to check the stock price. If we check the 5-year chart, we see that STOR Capital is up almost 30% and has come down in 2020 because of the coronavirus, of course. From March 2020 they did climb all the way up, but if we check the 1-year chart we see that STOR Capital is down almost 10%, which is caused by several broader things in the market and not per se the fundamentals of the company. If we check the year-to-date chart we see that stock is down 15% right now. This is also because of several reasons and not because of fundamentals. I think when this stock comes down more and more, the stock price will hit a very interesting buy area for me. So let's check the fundamentals to see if STOR Capital is a buy right now. STOR Capital is an 8.4 billion market cap company with a 12.7 billion enterprise value. Right now they have a PE ratio of 30, which may be a bit high, but please note that this PE ratio has come down a lot lately because the stock price is going down as well. Personally, I don't think the current stock price of $29 is the bottom. I wouldn't be surprised if it hits $25 in the coming weeks or months because of everything that's happening in the markets right now. When the stock hits $25, the PE ratio will also be around 25, so this might be a good thing. STOR Capital has an operating margin of 54% and a profit margin of 34%, which are both fine to me. REITs have a higher margin in general, so I'm not surprised by these numbers. Both return on assets and return on equity is a bit low. You want this number to be above 10% in the ideal situation, so they have some work to do here. In this chart we see the revenue growth per quarter and year for STOR Capital. It's looking nice and goes at a steady pace. It also is a good thing that after 2020, which was a tough year for STOR Capital, the revenue is increasing again. In this chart we see the total cash and debt for STOR Capital. Right now they have a total cash of 64 million and a total debt of almost 4.4 billion. Companies use debt to grow the business, so don't be scared by this number. But it has to be said that you want this number at a healthy level. Right now it seems to be at a high level, so I would like to see this number to go down a little bit. Store Capital has a current ratio of 1.9, which is also fine by me. You want this number between 1 and 2, which they are doing quite good. Store Capital has an operating cash flow of 583 million and a leverage free cash flow of 487 million. Free cash flow is really important for companies because it's used to pay down debt, do acquisitions, buy back shares and pay dividends, and many more things. Here we see that the free cash flow is increasing at a steady pace every year, so it looks really good to me. As mentioned before, free cash flow is used to pay dividends. We see that Store Capital has a 5.28 dividend yield and a payout ratio of 149%, which is too high obviously, but when we check the breakdown of the payout ratio, we see that everything is well covered by Store Capital. Based on this year's estimates, the payout ratio is at 72% and based on the cash flow it's at 77%, so this looks all good to me. The 5-year growth is almost at 6%, which isn't that high to be honest, but at least it's growing. They grew the dividends for 6 years in a row and they pay dividends since 2014 according to Seeking Alpha. So my conclusion is that Store Capital is a great company with a well-diversified portfolio and a lot of big customers in it. The pipeline is also looking great, which is very important to me for REITs. The stock has come down a lot lately, and if you compare it to the S&P 500, you didn't any better with owning Store Capital. So that's something to keep in mind. But the thing right now is that when the stock comes down a bit more, the valuation of this company gets more and more interesting. Right now the PE of 30 may be a bit too high for this company, but when it hits 25, I think you score a decent deal with this company. They pay a solid dividend and the stock price went down because of the fear in the market and not because of valuation. For now, I think I will put Store Capital on a watch list, and whenever they hit the area of $25 to $26, I will check the fundamentals again and start buying maybe. For now, I will try to find better deals in the market. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.